Hello, everyone. This is a review of a recent economic report that came out last week, or maybe actually, yeah, late last week. And it was the Consumer Price Index. This is a measurement of inflation or part of the economy, and it's compiled by the Bureau of Labor Statistics. Now, this is a very important indicator because it has serious implications on things like monetary policy, cost of living adjustments in contracts, and it kind of gives you an idea of how far your dollar will go today and maybe into the future. So CPI stands for Consumer Price Index, and it measures prices that consumers pay, and it's an average. Now, some prices go up, some prices go down, but what the Bureau of Labor Statistics does, it takes a sample of consumer purchasing habits, and it compiles what they consider to be a typical basket of goods consumers buy. And then they track the prices of those goods to see if the cost of buying that basket of goods is going up or is going down. Now, what we see here is a graph that has two indicators here. One is called CPI total, another one is called CPI core. Now, CPI total, that is exactly what it is. It measures all of the prices on average, and you can see how that is been going up, accelerating, and this is a year-over-year average, year-over-year percent change. CPI is a monthly indicator, so what they did is they took the May number and divided it by the May number of the previous year to get the annual change, and you can see how this has been going up. Now, this gold line, that is CPI core. And what they do is they take CPI total, but they subtract out energy and food prices. The reason why they take out energy and food prices is because energy and food prices tend to be very volatile, which could cause the indicator to be cause it to fluctuate, which could make it difficult to identify any changes in trend. So you can see the blue line here. See how it's wild swings here? And that's primarily due to energy and food prices. Notice how the gold line is pretty stable, and it hovers around 2% since 2002. But you can see when the blue line total is below the gold line, that means energy and food prices must be falling faster than all other prices. And now you see the blue line is above the gold line, which means food and energy prices are rising faster than the average. And most likely it's energy prices. The price of gasoline has been going up, and you could see this is the primary driver of this uptick in CPI total. Now, this has a big implication for the Federal Reserve. The Federal Reserve establishes monetary policy, and they do that by manipulating interest rates. Now, interest rates have been very low for quite some time, since 2008. And one way to try to cool down inflation is to raise interest rates to make it more costly to borrow. People borrow less and they spend less. And so the Federal Reserve has a meeting coming up this month, and expectations are that they're going to raise their target for a particular interest rate called the Fed funds rate about 0.25%. And this report, the CPI report, is basically going to reinforce the notion that they will indeed cause interest rates to go up. So hopefully this sheds some light into what this indicator tells us, and I would love to hear any of your comments.